Warren Buffett could make billions tomorrow, not next year, tomorrow. He could day trade like everyone else, staring at flashing charts, clicking buy and sell in seconds, chasing fast wins. Instead, he sits on massive piles of cash and does almost nothing. And somehow, that nothing has made him richer than nearly every trader on earth. That's the contradiction. If day trading is the fastest way to win, why does the most successful investor alive completely avoid it? To understand why Buffett hates day trading, you have to go back to the late 1990s. The internet was exploding. Tech stocks were doubling in weeks. CNBC felt less like a news channel and more like a casino with better lighting. Day traders quit their jobs, glued to screens, convinced they'd cracked the code to easy money. Meanwhile, Buffett went on television and calmly said most of these tech companies didn't make sense. People laughed at him, called him old, said he'd missed the future. Then, the year 2000 arrived. The dot-com bubble burst. Trillions of dollars vanished. Most day traders disappeared. Buffett didn't celebrate. He just waited. He'd seen the cycle before. Day trading always begins with a gold rush. A handful of people get rich fast. Screenshots start spreading. Luxury cars appear on social media. And suddenly everyone believes they're smart enough to win. Trading apps make it feel harmless, even fun. Bright colors, instant execution, confetti when you win. Losses are quieter, easier to ignore. During the pandemic, millions of new traders flooded the market, many buying stocks they didn't understand with money they couldn't afford to lose, following advice from influencers who'd barely been trading longer than their audience. Buffett watched all of this and summed it up with one line. The stock market transfers money from the impatient to the patient. Here's the part nobody likes to talk about. Most day traders lose money. Not a few, most. Study after study shows that around 80 to 90% of active traders underperform the market over time. Not only do they fail to beat it, they do worse than if they had simply bought and held. The reason is simple and brutal. Every trade comes with costs, fees, taxes, bad timing, emotional mistakes. It's like trying to sprint up a down escalator while paying a toll on every step. Buffett once joked that if trading were an Olympic sport, the real gold medals would go to brokers, because every click you make pays someone else. Then there are the stories no one posts online, accounts blown up in days, people hiding losses from family, traders chasing losses late at night, convinced the next trade will fix everything. In 2021, a young trader tragically took his life after misreading his account balance and believing he was buried in debt that wasn't even real yet. Just numbers on a screen. Buffett has warned for decades that markets punish. Emotion, and day trading turns emotion up to maximum volume. So the uncomfortable question is this. If day trading is so powerful, if it's such a reliable skill, why aren't the richest investors in the world doing it? Why is Buffett holding stocks for decades while millions of people try to beat him in minutes? The answer is that day trading hasn't collapsed because hope is addictive. A few big winners keep the dream alive for everyone else. Platforms profit from activity, not from your success. More trades mean more revenue for them, whether you win or lose. This isn't new. The tools change, but the trap stays the same. Warren Buffett doesn't hate day trading because it's exciting. He hates it because it feels smart while quietly doing damage. He knows the market doesn't reward speed. It rewards patience, discipline, and the ability to do nothing while everyone else panics and clicks. Day trading promises freedom. Buffett chose boredom, and boredom made him a legend. The real question isn't why Buffett hates day trading. It's why, after everything we've seen, so many people still believe they'll be the exception.